Hey everyone, welcome to Thursday's edition of PPP Loan Forgiveness Application Q&A, calculations and planning, etc., etc. And so who would have thought that we would still be doing this when we first started doing these on the 24th of March? What do you think, Adam? Would you have envisioned that we'd be going this long?
In the beginning, no, but the farther we got with no guidance, I guess probably yes.
Yeah, exactly. I just read an interesting article on Forbes today that just came out about PPP loan application and the guidance or lack thereof that was time-stamped at 7:24 a.m. this morning. I thought it was actually pretty decent, but the bottom line was the guidance that came out on Friday was disappointing. So before we lock and load, as people are ramping on here, I can't believe that we've still got 60 people joining on here. But before I turn it back over to you, Adam, for a little segue, and same way to you, Jack, I just want to give a shout out to some other folks that I think are doing a really good job on trying to stay current on all of this stuff. Shumaker has been doing a really good job. They've got another webinar this afternoon at 1:30 to 3 that you can sign up, and I think Jack can talk a little bit more about that. But I also want to give a little shout out to Brandy Milazzo and the folks at Ascension Law. They've been on top of this too, doing a lot of kind of town hall webinars as well. So thanks to everybody that's trying to help in the middle of this, because it's been challenging for everybody, I think. So Adam, you have any segue or anything that you want to talk about before Jack can talk a little bit more about that? Also, before you do, just a reminder to everybody, because now we've got 65 and ramping up, please use the Q&A for questions and not the chat. Again, please use the Q&A, not the chat. Save the chat for your jokes and harassment. So anyway, Adam, you want to take it?
Yeah, I'm just going to reiterate what we covered off on in the explainer on the webinar on Tuesday, which is most of the guidance that's come out related to the application looks like it's cash basis on the front end, accrual on the back end. And by that, it means, hey, if you paid it in the 56-day period, regardless of the time period that it covers, it's going to be eligible, and you can accrue for stuff that you paid outside of the cover period that occurred within the cover period. And I think the only outstanding question that we have, which we think currently it's going to be included, but it's possible that it won't be, really comes down to payroll, and extremely specifically that first payroll cycle that occurred where within your cover period. So for example, got the money on the 15th, had payroll on the 16th, keep it simple, you pay current. So that 16th payroll included time from the 1st through the 16th. So technically there's only one day that was earned within your cover period. Does the full time count or not? We think it probably does at this point, but there's also a possibility that they'll come out with further guidance that it doesn't, because, and I know it's frustrating to a lot of people on the phone that we're not giving a super definitive answer other than run it both ways, because they were pretty clear on the accrual on the back end, and the rest of the guidance all says, if it's not a payroll related cost, it's pretty clear. If it was paid in the period, as long as you aren't getting egregious with prepayments and stuff on the back end, it's going to count. So that's one thing. I think the second thing that we've received some questions on, and it's mostly related to just, I don't know where they're getting it from, but it's poor guidance that's out there. Some people believe that there's this all or nothing thing that exists, whereby, hey, if I got $1 million and I don't spend 75% of it on payroll, none of it's forgiven. It's all a loan. It's all or nothing, period. That's not true either. The forgiveness amount is the lesser of the following. One, what was the loan amount? So obviously you can't be forgiven more than you borrowed. That's number one. Two is if you had a reduction in headcount, meaning that no matter what you did, your headcount's just less, then your forgiveness amount is reduced by that quotient. So if you have 80% of the headcount, total forgiveness amount is now 80% less. 20% less, because your loan value, your forgiveness eligibility is 20% less because you didn't get the headcount back right. And then the third test is really the payroll cost itself. So your max forgiveness is, payroll cost divided by 0.75. So it's the lesser of all those numbers. So if you're in the magic ratio of got the headcount right, spent 75% on payroll costs, and I spent 25% on the other eligible costs, equaling 100% of my loan, I'm good. And the only time you're not good is if you don't meet that criteria. And even then, though, it's just scaled down. It's not all or nothing. So that's the other thing that I just wanted to spell, is this all or nothing thing that seems to be circulating around there is just not correct at all, based on all the guidance, and also just looking at the application itself.
Before I pass it over to you, Jack, I wanted to dovetail into that, because we got one of the big banks that had issued an all or nothing clarification that threw a lot of people into a tailspin that they sent to us yesterday. They have come back and kind of retracted that with some explanation from an attorney, it looks like in Nashville. So if you guys don't mind, I'm going to read this because I think it is pretty interesting. So it was an all or nothing, and then they came back and said, well, actually, the ultimate answer to this is no, it's not all or nothing. That's not what we intended, but we had received some feedback on that issue, and we're going to clarify it. We expect to send out a link to the webinar, blah, blah, blah. The 75% rule, as of now, requires 75% sought for forgiveness must be used for payroll costs. So if some amount below 75% is used for payroll, it will reduce the forgiveness, but is not a bar to forgiveness. So right on, Adam. But then this is where it gets interesting. It says, as of now, above, because we expect that legislation is going to impact this rule. This week, House of Representatives is expected to pass the Paycheck Protection Program Flexibility Act, which under its text changes the restrictions from non-payroll expenses from 25% of loan proceeds to 40% of loan proceeds, which is essentially would make it a 40-60 instead of a 25-75. Significantly, it still needs to pass the Senate and be signed by the president before it becomes law, but there's a lot of momentum behind changing this rule. While I can't guarantee that Congress will pass it, I would expect the 75% rule change to happen fairly soon. So that was as of 10:55 a.m. this morning.
With the good news that a lot of people's clocks are expiring coming up in the next week. If you were
right.
Applications in. So thanks for that.
Jack, you want to add anything to this?
Sure. It's again a waiting game to see the bit by bit, incremental explanations, guidance, rule changes. And so, I also am receiving and sharing the frustration of our clients that, have a lot of questions that remain unanswered. And so there are things still floating out there in Congress that hopefully will address some of this stuff. And again, not going back to basic civics lesson, but, you have different organizations, you have the legislature, and then you have the regulatory agencies scrambling and interpreting, and so it's a lot of fingers and hands in stirring things up, and we're just still waiting to hear back on a lot of these things. And there are a lot of common threads that all of us share in trying to figure all this stuff out. So I hate to sound like a broken record, or maybe I should say a scratched CD at this point. But it's the same. It's, we get a little bit of information, but there's still a lot that we need in order to do this properly. But we don't even know what properly means at this point.
Hey, Jack, is there any place that you would like to direct people to if they want to go to your client alert on the payment protection program loan forgiveness webinar that starts at I think at 1:30 today?
Yeah, so thank you for that. This is just another opportunity. I've been very fortunate internally at Shumaker to have some really good SBA loan experts, and I call them our SBA ninjas, like second level black belt, because they're the ones who have been funneling information internally and externally, and kind of keeping us all up to date on things. And so two of them are going to have a webinar, and they're going to take a deeper dive, I think kind of similar to what you guys did on your recording with Blaine, and hopefully answer some of these questions. I will tell you that they quite candidly may have, and no promises, but they may have a little more insight into some of these things because they are part of this community that is an SBA oriented community that, may have some speculation and are influential in kind of guiding the SBA and saying, this is kind of what we think are good ideas or how to do things. So, it may be worth your while. On my LinkedIn page, I have a link to that, and I can actually, while we're talking, put it into the Q&A for people to, I don't know if people get to see that or in the chat. I think in the chat we can put it to all, but however you think you can figure that out.
Yeah, put it in the chat, and then you can select to all participants. Also, okay, everybody on this, so we've got now 84 people that have signed on, so thanks for doing that. In the chat, I put the link to the latest Forbes article that just came out this morning as well. So that's there, so that'd be a good place to do it, Jack. Let's go ahead and lock and load into some questions if you guys are up for it. So this is from Neil. The question is captive insurance covered towards PPP, and also broker's fees covered towards PPP?
So captive insurance in the sense that it's health insurance as a product. So whether you're self-insured and you're using a captive policy for that, and you have some sort of catastrophic overlay associated with that, as long as you've been pretty consistent, I would think, in the premiums that you've been paying to yourself, that probably would be covered, I would think. It didn't rule it out. It just basically said health insurance. And if your mechanism of health insurance is self-insurance, and your platform for doing that is a captive policy, that probably would work. What I don't think will be included, maybe you could back into it as part of the auto expense language, would be a captive policy in the more traditional sense that is more of a property casualty workers comp type coverage that's pretty common in the construction industry. Or if you're kind of one of those out there people that, hey, we're just insuring uninsurable risks via a captive policy, like a, Gary leaves, how are we going to replace him type policy.
That's going to cost you a lot.
Yeah, really, that's just a backdoor, tax deduction / savings account. I never said that on live TV. Yeah, perfectly legitimate. If you have the cash flow available to do it, that's probably not going to count either. So, I mean, if it's health related, pretty good chance of it. If it's not health related, but it's related to vehicle expenses, I'd say that there's a chance, depending on further guidance related to what actually is a vehicle expense, because right now that's not completely clear. And if it's just a straight up uninsurable risk type of thing, I can't imagine that would be included. So when you come back to the actual costs themselves, I mean, we're indirectly paying brokers fees as a part of our health insurance bill. So, the way we're doing that is we're paying United Healthcare. United Healthcare is turning around and paying our broker. So it's sort of like the triple net lease versus the gross lease. I would suppose brokers' fees would be included if it's buried in the policy itself that you've written.
All right, great. Thanks, Jack, for putting that in the chat. Appreciate that. Next question, any updates on PPP eligibility for 501c6?
Jack was supposed to take that one, not me.
Yes. So the answer
Next
is
question. Google it while we stall.
Oh no! Whoops. No, actually, it's funny because in all candor, I didn't remember that until this morning. I was like, okay, what was my homework from the other day, right? And so, unfortunately, and I did do the research. I haven't seen anything recent on that. And I think that, but however, I know there is activity. I mean, you can imagine all of the national-based C6s, all of the local-based C6s, like the chambers of commerce and here in Charlotte and otherwise that are looking for guidance on that. So they are, and then other like the U.S. Hispanic Chamber of Commerce. So there's a lot of pressure on Congress. And while I don't know the particular details of what is exactly in the House bill that passed that is floating around the Senate, or, there's all kinds of permutations of that going on in Congress right now, that has to be addressed. And so at this moment, I don't have any new information on that. And certainly I will post that if I do, but there is stuff going on. It just hasn't been reported yet as to any solutions or resolutions for C6s yet, as far as I know.
I guess to be clear, C6 wouldn't qualify right now, and I'm assuming that's primarily because a lot of them receive public funds. So I guess the legislature's thought was, well, you're already getting government money. Why do you need more government money, maybe? And that's what they're trying to fix.
That's part of it. Yeah, a lot of programming that these C6s do are publicly funded or membership driven. And so, not necessarily personnel driven. I mean, there's all kinds of theories as to why they were left out. But then you think about, okay, C3s, some C3s run pretty slim on personnel. So what kind of funding are they going to get? So I think there needs to be some reconciliation of the fact that C6s, while nonprofits, are still businesses that provide business resources and have costs associated with that, and should survive. Like, imagine the Charlotte Regional Business Alliance, all the good work that they do. And I'm a former board member of that, and I'm a board member of the Alliance Foundation currently. So the C3 part of the C6 of the Charlotte Chamber, and we're still trying to figure all that stuff out. But there are costs associated, and they provide great services. So there will be a continuing pressure to get that straight and get the word out as to how that should be handled.
So the next question is from Brett, and I'm going to probably answer this one because this is a Gary related one.
Perfect.
On PPP, can you use funds to pay more than 75% in payroll? Yes. Emphatically, yes. It could be 100%. The bottom line is that was created to help payroll, right? So Adam,
Yep.
All right, so validated. Next question is from Jennifer. There were bonuses and raises promised to specific employees that prior to COVID for meeting milestones. Those bonuses and raises will hit the last two payrolls in the repayment. Will they still count towards repayment?
I mean, right now, the way that it reads, as long as you don't exceed the 15,385 number, and again, it will pass under the black and white test. Under the, hey, is it, would I want to testify in court about it? That follows up on the Jack rule of Jelly of the Month, really earned club. which is, probably shouldn't be paying a bonus just for the sake of paying the bonus to use up some cash. It really should be something that you feel good about, and that if ever called to court, not that you would be, but if you ever were, you could say, well, hell yeah, that was legitimately earned, and that's why we paid it.
And here's an interesting concept, and I'm not proposing this or a proponent of this, but there is some discussion about what hazard pay means. And I think obviously the obvious ones are healthcare workers that are in, where people are calling the frontline workers, and we certainly appreciate all of what those people are doing. But coming into something that is a hazardous environment, and I'm not talking about just driving down the highway or something like that just to get to work. I'm talking about kind of what is in the gray area. So something to consider. I don't know if there, and maybe there will be a further interpretation of what that means, but so there's not, from my understanding, a prohibition against bonuses, but it has to be for appropriate reasons, and you can't just fabricate something out of thin air and say, well, we're going to give you a bonus because you were a good cheerleader during this period of time for the company or something along those lines.
Yeah, and I think related to that, one of the things that also, I don't know if it's going to be a question that comes on later, but it gets to the $15,385 number. Our take on it, since the instructions, says don't put more than this number on the schedule. I think the limiting thing that could end up happening, that we actually had a case of yesterday, is we have a company that legitimately, based on what's happening right now, they're having to provide more services and they're otherwise bonusing their people based on that. And some of them in this particular payroll period are going to earn more than the $15,385 number, but they're not going to earn more than $100,000 for the year, because these are people that, typically are kind of a $50,000 to $60,000 a year type job, but this year they may earn 80 or 90 due to this limited window of stuff happening. Right now, the way it reads is you're still stuffed on that. Like if you went over, that's not going to count. Even though on an annualized basis they wouldn't make $100,000. So that seems to be a limitation that'd be great they could figure out. But at the same time, putting on the audit hat, I get where they're coming from. I mean, 15,385 is a line in the sand. It's very easy to prove or not prove, versus, well, they went over, but I promise you they're not going to quite make it. So if you want to check the W-2 at the end of the year, you can, I guess. I think if you go over, you just got to count the fact the money's not going to count.
All right, this is from an anonymous attendee. Can back rent payments such as January through March that are paid within the covered period be included in forgiveness calculation?
The way it reads now, it does. So that I think that the other one that came up yesterday is what you'd have to be careful of is it really back rent, or was the rent permanently forgiven pursuant to another agreement? So if you really had just been not paying it and then you got to cut up, that goes back to, hey, it's cash basis on the front end, accrual basis on the back end.
All right, this is from Joe. If your loan app has a higher FTE count than the other qualifying periods, is that FTE count that you have to use?
I mean, it's favorable to you, so I don't know why you wouldn't. Meaning, loan app, say that one more, read the question again, I might have gotten that wrong.
So the loan app had a higher FTE count than the qualifying periods.
Yeah, so the guidance, the application for forgiveness was extremely specific about you have only 3 periods to look at. It doesn't matter what your loan application said, because your loan application gave you a ton of flexibility on the periods. The flexibility that most people used was a calendar year or a rolling 12 months, which is not what the application reads. The application reads specific points in time. So for the purposes of calculating your denominator, you're going to use one of those specific points in time, not your original application. And Joe, you had too many people on payroll then. Let that be a lesson to you. He's going to kill me for that.
Oh, yeah. Didn't Adam say something about collecting unemployment on Tuesday? Even if the state denies you, you can get the federal. My wife is getting the runaround outside of PPP, but appreciate any advice you've got.
Well, the way that and I'll ask Jack to weigh on the end of this if I get something wrong here, but the way that the expanded unemployment benefits really read is that, you know, look, if you're out, you know, and you had to take a pay cut, even if it's part-time and, you know, your employer can't restore you, we're going to give you an extra $600 a month, $600. In addition to expanding the time frame that you're eligible for unemployment. So the problem that you get into is when you're at a reduced number, but that reduced number is still in excess of what you can earn to qualify for North Carolina unemployment, which is $420 a week. So how does the state mechanically pay you if you are not eligible for the state benefit because of what you made, but you are eligible for the federal benefit? And I apologize for not having the answer other than that appears to be dead ass wrong based on the original intent of the expanded unemployment benefits. But how the state mechanically still gets a check out, I don't have an answer to that, unfortunately.
Yeah, and I would say similarly, and I'm not an employment law expert and to be able to go through all of this, but I think you look into the intent of what it was for. There are, as I said, and we've talked about this in prior programs, there are different federal programs. One that is supposed to be a supplement to the state benefit. There's another one that is regardless of eligibility for the state benefit that you can apply for. And then there is another program that, my understanding, that assists employers with the unemployment benefit. And there's all kinds of acronyms for those things. And if I find, I'll look back as we're talking and see if I can find the link to those, because I think I provided those in a prior video discussion as to where you can look, and it walks you through all of those, the federal unemployment benefits that are available.
So this note just came in from Chase to us. The unemployment office told me that the employee has to qualify for at least $1 of state to receive the federal money.
I don't believe that was the original intent. And I have not read that anywhere. That seems like that's more of a mechanical. I mean, that doesn't make any sense because, yeah, why would I be in that scenario? I'm penalized, you know, because I made $420 a week. Now I'm missing out by working. I'm potentially missing out on $1,000 a week effectively, or sorry, $900 a week effectively, because I made $1 over or the same as the North Carolina limit. That, I mean, that just does not make any sense relative to the original intent. But at the same time, everybody that knows me knows that I'm not very good with dumb rules. But that sounds like an ineffective implementation of the rule as it was originally intended.
Yeah, and I would say I agree with that because the statute reads, I mean, it's a bolt-on, a supplement to the state programs for that particular program. So yeah, you have to at least have $1 made or $1 on the state side to get the federal. Probably is a literal interpretation of that, but probably not what was intended. So maybe there'll be more guidance on that, but I'll see if I can find some of that guidance on those federal programs that may have, we haven't been focusing on that. We've been focusing obviously on the PPP, but if I can find some guidance on that aspect of the federal supplement, I will share that.
So this is from Nick. Is there still a discussion going on about potentially extending the forgiveness period to something longer than 8 weeks? Have you guys heard anything?
Off to Jack.
Yes, my understanding is that is the case. Interesting though, that for those people that their forgiveness period started sooner than later, and they're coming up against the ending of that period, some decisions are going to have to be made with respect to eligibility of forgiveness. So let's say that you didn't use all of the money that you should have used or could have used because you just didn't have salary that you had to pay, or let's say you didn't even get to the 75% and now you have some issues or whatever it may be. If they extend the period of time, that should have some sort of impact and pro rata effect potentially on the forgiveness. So I'm hopeful that the feds will get their act together and make up their minds one way or another what they're going to do about this, because we're getting to a point where some people, not a whole lot, but some people are getting to the end of that 8-week period, potentially extended by the alternative calculation for the period from the first pay period rather than from when you got the loans. But we're still time's getting tight.
Next question up. It's anonymous, but I think I know who sent it. So you guess. Based on Schedule A worksheet, it appears that the salary hourly wage reduction applies only to employees who earn less than $100,000, Table 1, and not to employees earning $100,000 or more, Table 2. Is that correct?
Yeah, because if you think about that mechanically, $100,000 was the bar anyway. So the wage reduction only applies to pay below 100 grand. So as long as if someone was making more than 100 grand, they were totally reduced. As long as they're back at 75, you should be good.
Okay. This is from George. If our PPP loan hit our bank on May 10, do we still have 56 days to spend it, or does our time limit to spend the money end on June 30?
You have 56 days to spend it unless you pick the alternative covered period for payroll, which might stretch it a little bit. It's still 8 weeks. You're just talking about a shift in time, but that only applies to payroll costs. You still have the same original 56 days to spend the other covered costs like rent and utilities.
And just a little bit of speculation. So I think that the June 30th date, well, first of all, my understanding that the June 30th date is still important with respect to bringing people on board back to full salary or rehiring. So that's still relevant for that. But when this first started, I think that the feds thought that June 30th, we'd be through all this, and that the loans would happen more quickly, et cetera. So, obviously that didn't happen, but I think that the June 30th date was supposed to be a date for a lot of different things to happen. That was the deadline for a lot of different, and right now, really the main tether to that June 30th date is the rehiring requirement to get back up to full speed or close to it.
All right, the next question is from one of our favorite clients, and he has a rapper stage name known as Big Poppy. And here's the question. Clarify owner compensation limits for inclusion in forgiveness relative to average 2019 payments. For example, if owner paid themselves $0 in 2019, can owner compensation dollars be included in forgiveness for payroll? 2, go ahead.
So, the answer to that as it stands right now would be, if you were an S corporation, you didn't have a W-2. No, right now the way it reads, you wouldn't. If you were a C corporation and you had no W-2 and you just took dividends, the answer would be no, the way that it reads. If you're a partnership, you took some cash out, presumably to live. As long as those payments were subject to self-employment taxes, those would still count, even if you said I didn't technically have a salary.
All right, the next follow-on question here says, if an owner paid themselves an average of $5,000 a month in 2019, how much can they include in owner compensation for the coverage period?
I mean, generically, $5,000, so that'd be 60 grand divided by 52 weeks times 8 would be your number.
Okay,
Yeah, but I would say be careful. We're losing, I think, owner compensation in that second question kind of loosely. So, is that dividends or is it truly compensation that is subject to payroll tax or self-employment tax? So there's, make sure that that distinction is very important.
Yeah, and it's got to be the latter, just to be clear for everybody on the call. It doesn't matter what, in this scenario, it does not matter in an S corporation or a C corporation what your distributions or dividends were. It has to be something that came through payroll. Subject to self-employment taxes.
Yeah, that's what I meant.
thank you for clarifying. This is from Mark. So is interest on bank loan for purchase of company able to be used as mortgage interest since the mortgage was defined as loan on real or personal property? This would be, this would include goodwill part of the purchase price.
Yeah, I mean, generally, I think that's a dicey area. Jack, ask you to weigh in on this one. When I'm thinking, what's the intent here? It's interest associated with stuff you're paying property taxes on, and you're not paying property taxes. I get that goodwill is an asset, but every bank only uses tangible property as part of their covenant calculations because that's crap they can take back. They can't take back my customer list if I default on my loan. So that one just feels dicey, because it's not tangible personal property in the sense of I'm putting it on a property tax return.
Yeah, is there a way to kind of split that and say, well, the purchase price associated in a separate loan? Like, so for example, a lot of times you have a separate entity that purchases the real estate, and there's a separate, at least on paper, transaction and a loan associated with that potentially, and then loans on personal property, or for the purchase that basically we're paying for personal property goodwill. So, maybe splitting the hairs that way, and I'm not suggesting that that is appropriate or will work, but to Adam's point, it's the loan seems to be inclusive of a lot of different things other than the real estate. Is there an argument that because the bank probably has a lien, a mortgage on the property, maybe that part of the expense of the mortgage or the loan payment and might be inclusive, but the feds have not gone down to the minutia of pulling those pieces apart and saying what is valid and invalid in that scenario.
Next question is Eidl advance the same as the $10,000 grant?
Yeah, it was based on an employee headcount number up to $10,000. It's the same thing.
All right, here's the scenario. We received our PPP loan on 5/9, received a note from the SBA that we can apply for Eidl loan on 5/15. Are there any issues if we apply for Eidl after receiving PPP loan?
No, and in fact, that's what happened with a lot of people. You're not supposed to use the same money for the same purpose, but a lot of people were in the same boat.
Okay. This is from Cindy. She went through a local bank, helped her fill out an application.
Actually, can we go back to the Eidl thing to touch on it? Because a lot of people have had these types of questions as well. although you can use it to pay debt, you're not supposed to use it as refinancing. And in the strictest definition of that, if you kind of look at the original stuff related to EIDL, you know, what they didn't, and same thing applied for PPP, it also applies for Main Street lending. What they didn't want to have happen is, like, let's say that I have $1 million line of credit and I get $1 million Eidl loan. So I get the $1 million Eidl loan, I have $1 million untapped line of credit, or maybe even it's tapped. What they didn't want to have happen is that I immediately turn around and take those proceeds, pay off that debt, and then all of a sudden the bank says, oh, by the way, you don't have that line of credit anymore. That, or, you know, you've got some term debt and you turn around and pay it off with the Eidl loan. You know, that was all the guidance around, you know, hey, it's not supposed to be used for refinancing or for new equipment purchases or stuff like that. I think the challenge, though, is that, well, what are you supposed to do if you do have extra cash, you know, because you have this loan? I mean, you know, you would think that you would pay down debt. Are you supposed to pay off the Eidl loan first? So we have had a lot of questions around, what am I supposed to do with the money? Because it's not necessarily traceable that I used it exactly for paying down debt, when an unintended byproduct is that because I now have this chunk of money at 30 years at a low interest rate, I've got some extra cash flow, I'm going to do something with it. And one of the somethings could be to pay off some debt, even though it says it's not supposed to be used for refinancing. So our guidance has been, you know, don't do anything that's going to put you in a position whereby if somebody demanded the money back, you couldn't pay it. When it comes to use of the Eidl funds, until there's more guidance, or, you know, a period of time, call it a year, goes by, where it's likely that nobody's going to ask you any questions anymore.
All right, next, so here's the scenario. It's an interesting one from Cindy. So she names a bank. I'm not going to name them here, but they helped them fill out an application on 4/23. And it says the applicant was in operation on 2/15/2020 and had employees that paid salaries and payroll taxes or paid independent contractors. My 10 folks are independent contractors, 1099s. 3 weeks later, the bank calls and tells me they made a mistake. It doesn't cover independent contractors, but now I'm 4 weeks in. What can I do? Doesn't this break the lender liability law? And can they renege on this? Should I make my independent contractors employees? Can I pay myself as an employee? Please help.
I mean, what was supposed to have happened is that your independent contractors were supposed to be on their own to apply, and you shouldn't have received the funds in the first place. The bank's technically correct on that one.
Yeah, and I'll say that we've had clients who sought the loan prior to the distinction or the clarification that independent contractors were not supposed to be included in employers' numbers. And so I've had those conversations. It's been several weeks now, but it actually came up even yesterday that, okay, now what do I do? I'm at a point where maybe I'm getting towards the forgiveness side of things. And, you know, my thoughts are is that it's clear that it was clear now in hindsight that because they changed the rule that independent contractors should not have been included in that calculation. So now you have money that you received and you've potentially paid that out. I think that, you know, is there a differentiation between the time that you received the money and were paying that out versus or in conjunction with when the determination that those independent contractors should not be receiving money from you? And so I think that's a potential issue that, you know, they're going to say, well, we're not going to slap your hands for asking for the loan, which included independent contractors in the numerics. But once we put the information out there, that shouldn't have been the case. maybe we didn't expect you to amend your application because that would kind of gum up the system essentially. And that's what I've told some people. And I said, but you need to think about, and we don't know necessarily yet what that means on the back end of things. So I think it's clear that you can't and should not be paying independent contractors with that money. And that, what happens to that money for those who received it and haven't paid it to anyone, what do you do with it? Can it be converted to the low interest short-term loan? Don't know if that's the case or not yet. So that's kind of where we're at on that issue. But to continue to pay independent contractors with money that you shouldn't have received, again, through no fault of your own, you likely did it unknowingly, but now that you have the knowledge, you need to be careful about what you do with that, not only for the forgiveness aspect, because one of the questions was, well, that's fine. I understand that I may not be eligible for forgiveness for that, and it turns into a loan. I said, we're not even there yet in that interpretation. So, but there are lots of people who are going to have that issue as to what needs to be done with that money. And so that's kind of my take on it.
All right, this is from Brian. Hey, Brian. Hey, guys, how do you calculate the reduction of forgiveness for employees that are not restored to 75% of their salaries?
It's reduced off the eligible cost number before then performing the other calculations.
So if they were at 50% versus 75%, how would
you have a reduction on what they were off
by that straight percentage?
It's not even percentage; it's dollar. Like it's a real dollar.
Okay, Brian. Hopefully that helps. Next question: how the PPP qualified expenses are going to affect the tax return for an Escort?
Right now, it's considered taxable income, so you're going to have a tax liability, unless that gets changed as part of the next round of legislation. Which on that note, given that bill's not going to be, the tax bill's not going to be due until April of 2021, if they don't fix that in the next 2 weeks, I think there's still a chance that it could get fixed later on down the road. So worst case scenario, just plan on the fact the money's taxable, reduce part of the benefit. When I say the money's taxable, the money's not taxable, but you can't deduct the expenses that are for doing.
Next question is, when trying to determine FTE for the covered time, we had one employee who asked to be furloughed to care for an elderly family member, and we allowed that. When figuring FTE, will he just count as one?
Yep.
All right. That was a statement. Next question. Unemployment dilemma is a problem for all of us as well. I had to pay staff the minimum of $950 a week, $350 North Carolina, $600 Fed, just to get the staff to come back to work, and then had to pay their salaries on top of the $950. The federal amount really screwed us up. Yeah, we've heard that.
Yeah, it's an interesting dilemma in that, it's clients would say, all right, it goes back to they have a better benefit if they sit on their couch and are making money by doing nothing. And I said, yes, but two things. First, it kind of is testing the loyalty of your workers in some circumstances. I mean, some have good reasons for not coming back to work, whether they have an immunocompromised person in their household or something like that. But it's you have to, your pot of benefits needs to be sweeter than what the feds and the state are putting together. And a lot of times it's been, continuation of benefits, of insurance and those kind of things that have kept people on board rather than taking the unemployment insurance. So what I've seen is more businesses or business owners who do not provide benefits are the ones that are really getting hit the hardest with respect to people staying on unemployment rather than coming back to work.
Yeah, I'd agree. I mean, not to echo Jack's point, and Gary, this is really your area of expertise. I mean, if you had a pretty good culture and you were honest with yourself about having a good culture versus, hey, I told people that I have a really good culture, but really I have self-doubt that I don't. It seems like those folks were probably fine. I mean, we've had some clients that, I look up to their cultures a lot that are like, yeah, man, we haven't had any problems at all with people coming back to work. Other people where, hey, the job sucks, and at the same time, we may have also sucked. Those are the people that I think are generally having problems.
Yeah, and the other thing, just to chime in on that, is unemployment doesn't go on forever.
Right. You're gonna have to find a job at some point. A lot of people looking for, there will be a lot of people looking for jobs that may be less jobs than were available pre-coronavirus. I mean, if you look at the, American Airlines thing, laying off 30% of their direct operational workforce because they're just planning on a reduced labor size. I mean, that's probably, I'm guessing that's probably about 100,000 jobs, if not more, that are just going to evaporate from the potential job pool.
Yeah. Next question is, what constitutes economic necessity for the PPP loan? What happens if we receive PPP loan, but current results aren't as dire as previously projected? It's still 25 to 30% lower than the prior year, and we're able to meet current financial obligations. In addition, we expect a continued downturn for the next 6 to 12 months. I'm just wondering how companies will be judged under this criteria, since true impacts were unknown at the time of loan application and continue to be unknown.
This feels like it's going to be a tag team question, so I'll start off. First off, that in terms of the direct impact, meaning like, hey, be prepared, that only applies to people that took over $2 million that are going to go into the, hey, SBA is going to come looking. SBA still has the right to look. Their feeling is they probably won't look too deep, and they'll end up pursuing cases of just flat out fraud, meaning like I falsified payroll record type fraud, not, hey, did I really need the money or not? So then you kind of get into subjectivity of, did you need the money or not, which we've addressed in earlier webinars. Given that it is subjective, it's one person's interpretation. We just have a hard time, given everything that exists in our existing body of law related to property rights, that I have a right to have my property seized, Jack. That's the libertarian in me speaking, though.
Right.
For the practical answer, off to Jack.
Sure. Well, I mean, it's yeah, I would say kind of like rewind the tape a little bit on prior seminars that we've done together, where you have what are going to be the consequences. And interesting, total tangential side note, how about this scenario where even though you're under the $2 million, so yes, so let's start out $2 million. If you're below $2 million, you're probably in a safe harbor zone. Okay. That doesn't mean you're completely off the hook. That just means that you're in a category of borrowers that they're going to say, probably legit, so we're not going to look into it, and we have other bigger fish to potentially fry, and so we're going to go after them first. So there's a couple considerations as to whether or not, depending what happens in the next election, is there a more conservative approach as to, does that $2 million change to something differently or different? Probably not, just because the practical nature of having to do investigations is they don't have enough manpower or assets or abilities to be able to do that. So what is the likelihood of that happening? Probably pretty low. Now, here's the scenario. You have an employee who was helping you through this process, who, sorry about that, who becomes disgruntled and all of a sudden says, I reports to the IRS or the SBA, and it's a false report, but now you're on the radar. And now do they have a duty to investigate you, your company, with respect to the propriety of your loan, even though it's under $2 million. So that's a very lengthy way of saying that you need to have your documentation in order, and not be fearful that you're gonna be audited, but just have that in order. And you should anyway, but you have to do the calculations and you have to have some reasonable basis to do that. So, keep your papers, keep your documentation. As far as seeing into the future, as far as proper purpose, we've talked about, can you, if you don't use the money, can you hold on to it, use it for a rainy day or, a gloomy day in the company's financials? And I think that's to be seen down the road with what's going on in Congress and otherwise. So, hold on to that hope. But as far as going back to the fundamental question as to, what the necessity question, prior to this $2 million mark, we were talking about, have your documentation and do some financial, some pro formas and some speculating and seeing, what was your basis for getting and asking for the loan at the time. And I think in this particular question as to what can we show as necessity, and not necessarily justifying why you got the loan, but maybe why you're keeping it, if it's permitted to be kept later, is that just keep track of. And I still am a proponent and suggesting and recommending that you build those financial models, and you kind of have to anyway, I think, to survive, to get through these times, to kind of know, well, what happens if we experience a 20%, 30%, 60% increase in business? Or what if we were expecting a 60% increase and only ended up being 40 or 30 or 20 for whatever reason? So again, the financial modeling, I think, is a key component to your survivability and success moving forward. Again, previously we were talking about that in the sense of showing the need. And now we're talking about in the sense of, knowing kind of what your future is in anticipation of having to show someone that, yeah, there is a continuing need, because the reality is that you still need the money moving forward.
All right, I'll do a quick time check. It's 11:58 and we still have about a half a dozen questions in the queue. We'll probably get a few more. So for anybody that has to lop off here, we will post this on the BGW CPA YouTube channel later on this afternoon. You can review whatever you missed. Again, we will put it up on the BGW CPA YouTube channel later on this afternoon. So next question is from Neil. Can employer allow employees to expense utilities and then show that towards PPP?
That's our middle bucket. We feel like that, there's a logical case that, hey, I've got everybody telecommuting and now I have an additional expense that wasn't otherwise part of my expense regime relative to pre-pandemic. However, most of the other stuff says, hey, it's, whatever your crap was before pandemic is the crap that we're going to allow. So probably that's going to be the middle bucket, I think, for us, which is, that logically makes sense, but don't necessarily count.
Yeah, I would say don't start fabricating stuff, but reality is that maybe those employees are taking on an expense on behalf of the company. And so, okay, printer ink or printer paper, that I go out to Office Depot to get. Actually, that's not true. I brought some home from work, so I'm cheated a little bit. But I am paying for my own
You're
ink.
on record.
There's no work ink for my printer at work, but yes, there's paper. So hopefully everybody takes a few pens and paper every once in a while, right? So anyway, to Adam's point, just again, document it. But if they are kind of a surrogate incursion of expenses for your business, then potentially yes. But I mean, those are expenses. That's not salary. So you also need to be careful that you don't say, well, now I'm paying them additional dollars and categorize that as compensation when it's really reimbursement.
Yeah. So to that point, I mean, the other way to get to that answer, you can't count it as compensation unless it really was compensation. So, the other thought would be very similar to the hazard bonus. If you said, hey, we're going to gross everybody up by $1,000 inclusive of the incremental tax payment to cover the additional expense we know that you guys have for doing all this stuff, and it went through payroll, that probably could fit in sort of the hazard pay type of compensation arrangement, because assuming that the person asking this question is struggling to get to the 25% bucket until they have the payroll bucket covered, but the other answer is we'll just make the payroll bucket bigger, that you can't do it without it being taxed, which is going to cost more cash, but at the same time, in theory, it should be forgivable anyway. So from your perspective, it should be neutral. So just think about, is this something that I want to potentially run through payroll as just a part of their compensation, as an item.
And if I could just change subjects for just a moment before people get off, since it is after 12, two things that have been on my mind that I wanted to share in the beginning, which is, one thing is that I did post the link to the North Carolina unemployment website, and it has kind of the categories of, the state unemployment, the federal subsidy for those that do qualify for unemployment, state unemployment. And then there's another category that is a federal subsidy for those who do not, for example, independent contractors. So, feel free to take a look at that. The other is talking about C6s and how important they are to our economy. I received from the Latin American Chamber of Commerce yesterday around this time information that your payments, your PPP payments, may come in the form of what looks like junk mail, but it's called the EIP debit card. And the mail is likely from the Money Network Cardholder Services. So looking totally bogus probably when you open it, and may even look like, some sort of, they sometimes businesses will send you fake looking credit cards that, just to kind of stimulate your interest, but apparently this is real and it's not a scam. So, please be careful that you don't throw that away, because you may not find the funds in your bank account. You may actually find them in the form of a debit card that comes in the mail. So two little pieces of information I thought would be helpful.
Yeah, that's good. This is from Mark. When can or should you apply for forgiveness? Prior to the 56 days, at 56 days, or within 30 days at the end of the 56 days?
I don't see how you could have the information available prior to the 56 days. So it would be assuming that you don't have any accruals that you need to demonstrate payment on, and you've otherwise deployed the money, I would go early. But if it's one of those where you've got some hair on the dog, that there's some gray stuff, or you otherwise need the clock to extend out and you're just waiting for additional guidance, I would go late, frankly. The other consideration too is that I don't know how much I would get in this business, because it is technically allowable, but it's not necessarily something that I would want to then have to go before court and testify on. Is that technically you are allowed to continue to defer your employer associated payroll taxes until I apply for forgiveness and have a reasonable expectation that my loan is going to be forgiven. So if I delay the clock out, I can keep on pushing out my payroll taxes. But if I was otherwise ready to apply, while that's technically allowable, I don't know if I'd get in that business too much.
Yeah, and I would say as an extension of that if you're ready to apply, and I think that also means somewhat that you've maybe consumed all the money that you can use, or that you just consumed all the money properly, that if there is a chance that the period, if you haven't done that, if you still have money in the bank that you otherwise may have to give back or extends into the loan, you may want to wait and see if there's something on the horizon that Congress may pass, or the SBA or the Treasury, IRS may pass, extending that to give you additional time to use those funds that you're holding. So I think that would be another reason to potentially extend for a legitimate reason.
All right, this is from John. I received an email from the SBA on May 17th, and it said I could borrow $39,500 in addition to my PPP for a 3% interest rate for 30 years. It came from DISSTER customer service at sba.gov. It has my SBA application number on it. It says, create your SBA Economic Injury Disaster Loan Portal account. The phone numbers to contact are 800-658-2955 and 800-877-8339. The second number is to the SBA. I don't know where the first one goes to. My son received the same email for his company, but it says he can borrow up to $100,000 for the same terms. Is this a scam?
If someone's on the chat that knows where the email came from that already has an Eidl loan, that'd be great if you posted it. But my feeling is it's probably not a scam if it really is an SBA.gov email when you hover, meaning like when you hover over it, you check it with your IT people, it does not look like it's a blacklisted email address or from a blacklisted IP address. And the different amounts doesn't surprise me because there wasn't really, we have not been able to discern any specific logic as to why one person gets one number and another person gets another number on the Eidl loans from the SBA. So I would, if it was me, I might try calling the 1-800 number I didn't know. I'd also, check with the IT folks to make sure it's not a blacklisted IP address or email address. But other than that, it sounds like that, double check where it takes you, also to make sure you're not getting redirected. But it sounds like that's probably what happens.
Yeah, I'd say the same thing. I may be a little more pessimistic, cautious, suspicious, just because. So for example, we manage a lot of trademark portfolios, and our clients will get letters that look like they came from the US Trademark Office, from a Washington, DC address, and have some sort of official looking seal on it, like the eagle, like the president's seal or whoever it may be. So yes, do your due diligence investigation into it. Hover over that email address to see if it really is where it goes to. I would say it's not impossible, but it's difficult to spoof in a like SBA.com or .gov. And that's the other thing too is, is it .com or is it .gov? And the legitimate ones that are trying to redirect, let's say this differently. The ones that acknowledge that they are purposefully trying to redirect you when you're looking for a governmental agency can get away with it if they have the notice on the page that says, this is not like, if you go to SBA.com or something along those lines, that it will say, this is not the SBA. We are a private for-profit company, et cetera. But they'll have some really good information potentially, but they're trying to solicit your business. And in that instance, I think it was to help you get through the loan process, and now likely to help you get through the forgiveness process. So be careful about that. There are sometimes when I'm suspicious, I go to websites like, I think it's snopes.com, that sometimes will have information. And then just doing Google searches and in public forums that may have information as to whether or not this is a scam or not, but also understand that the scammers know that. And so, sometimes they try to outpace the good marks or the bad marks with fake good marks as to legitimacy. So be aware of all that.
Yeah, the thing that was interesting about this one, so it was SBA.gov, but Dister customer service, it makes me kind of go, I guess if it was me, I'd probably go to my SBA lender and versus trying to do something over the phone and just go, hey, is this legit? It's an
Well, if
SBA
someone
lender.
got a if someone got a live person by calling an 800 number and they were trying to get a hold of the SBA, I mean, that's pretty much a red flag that it may not be. I shouldn't say that, but I think in my mind, if a person answered the phone and I didn't have to go through a gazillion prompts and then say, well, you know, we'll call you back or whatever, then that seems to be maybe not so legit because they're so busy. They're not going to take your call live.
Right.
Yeah, I just got a note here from an anonymous attendee. We received these emails as well. We completed the application and received the funds from the SBA. They're good loans. All right, cool. I'd still be skeptical just in this day and age of crazy stuff. Looks like the last question up is, have you heard anything about another PPP round? We're looking at a rather rough third quarter and don't think we're alone.
I mean, there's still, I think you said in the last webinar, there's still funds available in this round. So, you know, if you've already taken PPP funds, you can't get another round. So I don't know anything about, hey, you can apply again. The EIDL loan would be the route that you go. But if you never got the PPP funding in the first place, then there still is funding available.
Yeah, I think not to politicize this at all, but I think that there's going to be a slower rollout because of what has happened with prior rounds. So for example, you know, we had obviously the large companies that didn't have that necessity that gave back money. And you know, now you have, for example, owners of real estate portfolios who are passive investors essentially, but you know, and so they're getting loans, and maybe they should or maybe they shouldn't get them. So there's thoughts of trying to curtail the abuses that they've seen or perceived in prior rounds because of the rush. There is definitely an acknowledgement that more money is needed, but they want to make sure that the money gets to the right places. And so you know, hopefully the answer is yes, and hopefully on a timely basis. But you know, we've experienced frustration with delay, and I think that even though the government may be higher on the learning curve and the banks are higher on the learning curve as far as the process goes, I think that there may be a bog down of the process in additional due diligence with respect to borrowers and borrowers' needs. Now that a lot of, I shouldn't say a lot, but many people have been helped by this, but there's an understanding that, you know, the economy isn't just rebounding as we had hoped, and there will be a extension of time on businesses that are government imposed, but also maybe practically imposed. So while businesses may be open for business, there are people that are not going to step foot in the inside of a restaurant for many months to come. And that's just the reality. And others that are, you know, were ready yesterday to go hang out and believe that they're invincible. And that's Jack theory thing kind of thing. But,
What,
you know,
what are you judging, Jack? I have gone out to eat a couple times on Friday. I couldn't help it. I just needed to get out.
It's from the concussion. That's what it is, right? Yeah. The concussion that I don't have. So anyway, my kind of final thoughts on that is yes, that more money, hopefully more money is coming, but I think there's going to be a more careful, thoughtful process to try to avoid the abuses that they've seen happen. For the most part, people are it's legit and they're using it for the right reasons, but you have some very large borrowers that are in trouble and have some splaining to do, and they're trying to avoid that in the next rounds.
All right. Thanks, Chase, for your kind thoughts as well. I can't believe we still had almost 90 people on the line today and answered a bunch of questions. So thank you to Adam and to Jack again. And looks like with ever-changing stuff, we're going to be back again on this same bat channel next week, and Adam will have a different background behind him. And hopefully you've got cell service and internet service wherever you're going. So if not, Jack's going to have to wing it, and he'll have to, you know, put on different, you know, clothes or something to go back and forth and pretend like he's you.
What?
So,
Wait, what? Did you say? What did you say?
yeah.
Just kidding.
Yeah, that'll work. I'll send you a picture. Anyway, so thank you guys for doing what you're doing. Thank you everybody for attending, and we'll see you bright and early at 11 a.m. Eastern time next Tuesday and Thursday. Thank you again to our panelists. You guys rock the house. We appreciate you.
All right. Thanks, Gary. Thanks, Jack.
See you.
Stay safe and healthy.